So you want to buy US real estate, but you're a non-resident, you have no US income, and you have no credit score, but you still want to get a mortgage and you don't know what to do. Don't worry, there's a way around it and it's called a DSCR loan. And in this video, I will explain you exactly what a DSCR loan is and why it's the best solution for non-resident investors. So what is a DSCR loan? DSCR stands for Debt Service Coverage Ratio. It's a loan type specially made for real estate investors, and it only looks at the cash flow of the property. So this loan is not based on your personal income, but on the projected cash flow from this property. So in other words, if the property is cash flowing, you're good to go and you don't have to show your personal income. How is a DSCR loan calculated? The DSCR formula is actually very simple. It's the rental income divided by the mortgage expenses plus property taxes plus the monthly insurance. So in this case, we take an example of $2,000 rental income and monthly expenses of $1,600. So we have $2,000 divided by $1,600. We have a DSCR of 1.25. In general, the rule of thumb, lenders want to see a minimum DSCR of 1 or up to 1.2. Of course, the higher the better. And if you're lower than that, it's going to be very difficult to get a DSCR loan because they want to see that your cash flow is positive. So if you're going to look for markets where the prices are very high and the rents are not in comparison with the purchase price, it's going to be very difficult to get the DSCR loan. Why is this great for foreign investors? First of all, they don't require you to have US income. You don't need to have a credit score. All of this stuff doesn't matter. Even though they don't even require you to show your foreign income. They don't look at your debt to income ratio compared to other mortgages. So if you're an entrepreneur and your salary that you give to yourself is not that high, but you have enough cash to buy a property, this is a great way to use leverage instead of buying everything in cash. The only requirements they have is the following. You need to, in general, get an LLC, you need to get a tax number, an EIN number, and you need to set up a US bank account. These are the basic requirements. Plus, you need to have enough savings for the down payment. In general, that's 20 to 30%, plus some months of extra savings that you need to have to cover the monthly mortgage payment and to cover the expenses. So they want to see that you have some buffer, that you don't put all your savings into this down payment, and if the property doesn't cash flow, you're basically bankrupt. The DSCR loans are great if you're a non-US resident investor, if you want to buy a long-term property for buy and hold or do a refi after a couple years. It's not suitable for fix and flip. The terms are not made for that. If you want to do a fix and flip property, you need to look for hard money lenders. But I think it's a great way to start, get your foot in the ground in the United States, use a DSCR loan, and then build your credit score. Then you can start using other real estate strategies. So I think the DSCR loan is one of the best loan types to get if you're a non-resident investor. I think it's almost the only option you have unless you're going to move to the United States and build US credit score or have US income. If you're a foreign investor looking to buy in the United States, then a DSCR loan is the way to go. If you want to get in touch with a few parties, I can highly recommend a few. They give good rates, have a good terms and conditions, and require loan down payment, only 20%, and the reserves are also minimum. So if you want to get in touch with them, send me a DM, I link them towards you, and then you can start getting in process to get your DSCR loan. If you like this video, then don't forget to give a thumbs up. Thank you for watching and see you next time.